If you're in your 40s and you live in Oklahoma like I do, here's part 2 of what I do for my family to try to protect ourselves and get ahead financially. Part 2 is life insurance. Our lives need to be constructed like a house. We need a good foundation. We need to make sure that there's our good structures in place to take care of our children should something happen to me or my wife. In estate planning, there's what's called a HIMSS clause, and that stands for health, education, maintenance, and service. So those are a few of the top things we want to prepare for and make sure we have covered. Make sure that our family can afford to eat, have some shelter and some clothing, and someone to take care of them, right? So what do we need to do that? Oftentimes, if we're young, like I'm still relatively young and we have young children, our kids are 8 and 12, we want to make sure we have a little bit of life insurance in place in the event of our demise, that we have someone to take care of them with a little bit of income to keep them going. So what we do is we use the rule of 5% to figure out what that life insurance need is. For example, if I bought a $3 million policy for myself or my wife, that would provide about $150,000 worth of annualized income to our estate to help our kids to get through to the next level, to subsidize their healthcare, education, housing, and things like that for whoever would be taking care of them at that point. So there are a lot of different ways to buy life insurance. What we typically recommend is just buy a term policy, and a term is exactly that. You buy it for a specific term or period. So oftentimes people will buy a 10-year term, a 15-year term, or a 20-year term. And what that means is, as long as you're making your payments, that life insurance policy is good for that many years. Oftentimes, term policies are the cheapest way to go. So as long as you're reasonably financially disciplined, it's oftentimes best to buy the term policy, which is likely much cheaper than a whole life or variable universal policy or other policies out there. Take that difference and invest it into the stock market or the S&P 500. So for a very nominal amount of money, I would say less than a couple $100s a month, I can probably buy a $3 million policy because I don't smoke and I'm in relatively good health at 43 years old. Furthermore, because we're business owners, we can have our companies pay for this under what's known as a key man or key person policy. Because if something happens to me, the revenue of my business goes away, therefore it's a justified business expense. So make sure that you have a good executor, a good trust, a good estate planning attorney. There are some online companies now that have some type lawyer fill in the blanks for the state of Oklahoma, which might be okay. It really just depends on your situation and your circumstance. But it's more important that you have something in place, because if your trust has to go or your state has to go through probate and you don't know where your kids are going to live with, it's going to be a much more long and drawn out and tedious and honestly traumatic experience for them. So be sure to take care of your life insurance if you need it. Figure out your coverage, how much you need. Make sure you're not paying for more than you need. I want enough to take care of my family, but not so much that it incentivizes my life to push me off a cliff. If nothing else, make sure you have a good will that's notarized, and I highly recommend you see an estate planning attorney just to get everything wrapped up and all the details how you want them. Oftentimes we have blended families, and therefore you may want to make sure that certain assets go to certain people. Again, that's totally up to you guys and how you want to do it. Just make sure you're crossing the T's and dotting the I's with a professional.